Hey, what's up, everybody? All right, this is Chef again, and today what I want to talk about is just a market update, and I think that there's a lot going on, and we want to see what's in store for the next few days and what to look for, right? So let's break down forward/ES, and then we'll break down a few more tickers and futures to see what kind of levels we're looking for tomorrow. So just a reminder for those who don't know, we did trend up all last year, and then this year we just been trending down from the beginning of the year. So the big catalyst now in the news articles are saying that we hit a bearish market, when in reality we've been trending down, and there hasn't been a bullish setup that goes bullish 100%. Everything has just been basically coming down, and we've been in a bearish market. So whether they say we're in a bearish market by percentage because of the drop, or we're headed into recession, either way, we're still down. At the end of the day, that's what's going on. And all the plays still have been bearish to the downside, been all that. So you can't really call the bottom. And as much as we've been trying, and as much as we've been catching these bull runs, it is still very, very bearish. Okay. So I think the next best thing for forward/ES, we do have this weekly chart. And I want to bring this up because now I want to explain to you guys the importance of understanding zones and accumulation and distribution and public participation. If you don't know what that is, let me show you clearly what it is. Okay. So here you have a cluster of bodies where we went range. Okay. A lot of you guys are going to call this chop. When you guys are on the little 5-minute time frames or 1-minute time frames, you guys call this chop. Sometimes you zoom out, but either way, you're still going to call it chop. Basically, what that means is that there is not a lot of trades in between. So you're kind of just stuck in one little area. But what's really happening here on the terminology is accumulation. Accumulation or distribution is going to be one of the two, whether it's going to break above or break down. That's what's going to determine the distribution or the accumulation. Accumulation meaning that it's going to push up. Distribution meaning that it built up and traded sideways in order to just sell off. That's what that is. So this is what a zone is. Okay, a lot of you guys know me, who I am as a trader. I trade zones. This is Chef, by the way, and I am in Conservative Collectors. And all I've been doing is trying to teach you guys and show you guys what supply and demand is. And every explanation gets properly broken down. So that's what this is, okay? The next step that you see is basically the public participation. So as you can see here, we never really went sideways until we hit this top over here, okay? Then we had some sideways action in between, but nothing as aggressive as this. So there wasn't that many candle bodies to go sideways in order for us to call it a proper accumulation phase. So no matter what it is, we've been on a staircase pattern since 2021, all year until the beginning of this year. And then that first candle just freaking went bloody red. So we've been trending down on an aggressive staircase pattern to the downside, right? So nobody saw this coming, guys, okay? Everybody's been trying to buy the bottom, and we've been trying to play calls in between, and we get so excited when there's a green candle. Okay, yes, that's cool. But in general, we've been aggressively trading with volatility this whole year. So if you are still holding your accounts green, and if you still haven't blown your account, congratulations. You have made it through a rough patch, okay? Plain and simple. So I'm going to show you little small areas of distribution. Okay, so this is a little area where we have some distribution, and then you have the bigger area of distribution. Okay, right here. Look how perfect that is. Okay, so we went sideways here, we went sideways here, we went sideways here. The difference here is that you want to grab the bigger candles, the bigger times where it goes range. This one did not hold. This one did not hold, so it created this as a supply. That's your zone. So now you know that the supply is coming down into the next one. And unfortunately, the next bigger one is way down here. Okay, so that 35.23, 35.20 if you just want to round it off, all the way down to this 32.55. As crazy as that sounds, there's potential that we may hit those two bottoms, okay? There are green candles in between. Okay, remember that even in the biggest downtrend, you will see some aggressive green candles. Even in a big uptrend, there is aggressive red candles. So doesn't mean that we're breaking trend. There's a sideways action that we need to see in order for this market to stabilize and to make the next leg up or next leg down, whatever the case may be, whatever comes first, whether it's going to be distribution or it's going to be accumulation. We want the sideways action. Right now, we haven't seen any sideways action, guys. I mean, we literally gapped down 100 points, I think it was, and we dropped even further. So like this market is getting crushed on so many levels, economical levels, fundamentals. Like it's completely freaking chaotic. Okay, the war is still going on. You know, China is still dealing with these supply chain issues. So prices in general for us in the U.S. is going to go up, plus the interest rates. So there's a lot more turbulence ahead, guys. All right. So if you are trying to buy the bottom and then trying to load up on something, let me give you guys an example. Okay. If you had $100 and you want to start buying this bottom, literally start with $5. Okay. Put in $5 of that and then add every other week as the market develops, add $5 until you get to your full position. By the time you get to your full position, you're probably going to be way down here. And then you're going to be already in the market, and the dividends are going to help you guys. And on the way up, it's going to take a few years. It's not going to be right away, guys. It's not going to be a V-shaped recovery. It's going to take a lot of fight for this market to come back up in any way, shape, or form. We would need a miracle on a economical basis. Somebody to say that you know the GDP is well underway, and it's you need all kinds of stuff, guys. All right, I'm not here to give you guys a fundamental breakdown, but these are the levels that you want to look for. Okay, when it comes to a zone, the importance of it and how it works here is investors like to get the accumulation phase. Okay, the accumulation phase is where they start buying. So they'll start buying at the bottom, start buying at the next bottom, start buying while it's going range, and as it breaks out. Right here, maybe like at this 35, what do we say, 20, they'll start adding more and then start adding more on the red candles. And then that's what creates the public participation phase where your retail crew comes in and starts buying the tops. That's why it goes higher, because it breaks above and then they go higher and higher and higher. That's retail crew. Investors, they like to buy on red candles and they add onto their portfolios. And as it goes higher and higher, they scale out, they trim their positions. Because you remember, they're not only trading options and spreads, but they're trading shares. That's the difference. So that's kind of the way it works. So since last year, okay, so we basically started here. We're below last year's level. So we just literally gave up a whole year's gain. It's crazy, right? This whole year, we literally just gave it up today. This weekly candle is just giving it all up. And if it drops even lower, we just wiped out a full year of gains within 6 months' time. It's pretty intense, right? But anyways, these are your next levels, guys. The public participation phase doesn't really have a strong support or a strong demand. The demand level, like I said earlier, is here. And then your distribution phase, which is your sell side, it's all up here. Okay. So these are the bigger ones that I gave you. And then you just saw this one that broke down. As you can see, we did reject there. We never went above, even with this bullish engulfing candle that wiped out 2 to 3 weeks. It still didn't continue because the bearish market is still here. So those people who are saying that we barely hit a bearish market, we've been in a bearish market, guys. So I don't know why they're saying that we just hit a bearish market when we've been in one. Okay. So get that clear. So this is the next piece I'm giving you guys, so you guys know like where there may be a potential like rounding bottom, and it may not look like a rounding bottom, but it's definitely going to have like a slowdown. So you won't see the candles too aggressive. You'll probably see like something come back inside and then maybe do this and do that and, you know, show up some type of bullishness. But this is what you want to see We want to see these level hold, and a lot of people are expecting it to drop some more, but you can't keep on dropping if you don't have a proper base. I'm not saying that we can't overnight, because this market does whatever it wants, but definitely look for some slowdown anywhere in these areas right here. It looks like a long shot, guys, but man, we've been dropping and trading within like 100-point ranges, so nothing is impossible, right? So look for these levels here. Tomorrow's quad witching, guys, so be careful. Whatever you guys do, your ODTEs, be careful on those contracts. I don't recommend you trade them, but totally up to you guys if you're going to trade. Good luck and stay green, okay? So let's go look at NQ. I think NQ is going to be the same thing, guys. I'm going to break down every little future just because honestly, everything looks the same. Everything looks bearish, and it looks like we're just going to keep on dropping some more and stuff like that, right? All right, let's check this out. All right, so here's the next piece. Remember, grab those candle bodies because the candle bodies are forms of candles opening and closing price points. So those determine a lot more strength versus the wicks. The wicks were orders that were filled in the past that may not be filled in the future. But here's your sideways movement. Sorry. This was your sideways movement on NQ, and right now we're at that bottom. If we break this bottom, okay, it may get a little crazy, and the volatility may kick in just a bit more, because honestly, if you look at this trend here, there is nothing that goes sideways, okay? This is what I'm trying to point out today. The fact that you guys should be looking for demand zones is a lot bigger than just looking for your basic support and resistance. The basic support and resistance are, some of you are going to try to chart in the daily and maybe grab like a wick here and then try to grab this, and then you try to go grab this wick here, and then you mark this piece here, and then you're stuck with a bunch of lines on your chart, when in reality, the demand is right here. And if that gives up, there really is no strong demand, unless you guys can point out something that went sideways in this specific area, which I highly doubt it, okay? For tech, it may be a slowdown right here next week. Who knows? This 11, that 11K number right there, that might be the number where we kind of go sideways a bit and just create some more sideways action. I really hope that that's what happens, because it looks like it's the last demand on the weekly time frame. Below that, it looks kind of scary if we're going to continue downtrending. It's scary, guys. So it could get a little more rocky, but we'll see. Okay, I think on Sunday I will revisit this video and these levels here, so you guys remember that, right? As for RTY, this thing has been trending down since this top that we talked about last time. Once this thing gave up, it's just been trending down like crazy. It hit this COVID level. This is when I actually took some calls here on IWM, which was pretty cool, pretty fun. But overall, we still came back down and we're below these pre-COVID levels. So for this RTY, the next demand is going to be here. This is the next space that we were trading in before that pre-COVID. This is where we ran up, and then we flushed all the way down and came back inside and kind of created this staircase pattern, as you guys can see again. So giving you guys a nice little rundown on supply and demand, on what these zones are and how you can use them. So look at this. Now we're flushing down, and because we gave up this huge distribution phase, we're definitely going to head into the next one. So that's exactly what it's doing. Here's your downtrend. Here's your rejection. Here's your confirmation. Here's your little dead cat bounce. And then here's your flush all the way down to the bottom again. So this is the next piece is going to hit that 1594. And then from that, you're looking at 1450, which is pretty aggressive. But yeah, you could expect a little more slowdown in the market pretty soon. But either way, we're still on a bearish sentiment. So either way, you still got to be careful, guys. No matter what you do, please be careful, okay? All right, there we go. This is the next base. We just broke below this one. So whatever, we'll see. I hope that NQ is the one that holds the most in value, but I guess we'll see. Gold. You guys heard me talk about gold. What I want you guys to do moving forward with gold, because we're in a bearish market and because everything is trending down, you want to take a look at gold because it's a safe asset. Okay. Uh, this one actually, I think there was some overnight news a couple of days ago where they talked about crypto, people going to gold instead of crypto, and it rallied on up and then it dropped back down. So that was this volatility right here. But I don't want you guys to worry about those comments. What I want you guys to see is the value of a safe asset. If the market continues to trend on down, I would consider having alerts on gold. Simply have these alerts and watch it go up, because what if this thing trends back up, it means that somebody is taking safer plays and they're allowing the market to basically crash on down some more. This gives you a little sentiment as to where the investors are putting their money in, right? Because in a bearish market in general, in the past, gold used to be almost like the inverse of SPY. So the market would be green and then gold would be red. And then gold would be green and the market would be red. That's how it was in the past. So things have changed, times have changed. Definitely everything is it's so different now. But either way, you still want to keep alerts and make sure that gold at least holds its trend. As of now, it hasn't made a lower low, and it's still holding this nice little uptrend, even though it had this crazy one after that news. And you guys remember, if you guys have been following the videos, I did talk about the war and how it came up, and then the double top here that created this rejection, but also the rejection created nice a retest, a proper retest of this accumulation phase. And then now we're kind of just trending back up. So gold is a very, very healthy indicator that will let you guys know if this market is going to keep on crashing down. And also if investors are taking the safe asset side of buying gold. Okay, so take a look at gold and also take a look at SLV, which is silver, some of the metals. I think this one may be the next piece to start running it. I have alerts right here at 2050 and then all the way to 21. If this thing breaks next week, I think I will take a position on it. Otherwise, I'm just going to let it do its thing and watch the way that the market moves and the way that it's going to move in the next couple of weeks. So keep alerts on silver. If we do accumulate just a bit more right here, you guys can see nice little base here. I should grab that top right candle. But if this thing breaks up above, I mean, we can head up onto this 24. So that would be a pretty nice move if we can catch that, right? All right, so that's that. The VIX, guys, remember you can't chart the VIX, so no trend lines. If you guys do have them, just go ahead and take them off, because fear cannot be charted, okay? Just have alerts on random numbers. We start trading above that 35 and then the 40, that's when the fear is going to come in a little bit more. So it gets more aggressive. The higher it goes, the more aggressive it gets and the more volatility that the market is creating. And the more put side you guys can grab, and the IV will be a lot bigger on the contract, so it gets a little wild. But yes, the VIX is still, there's still a lot of fear in the market, guys, so just be careful, all right? As for jets, airlines are taking a big hit. Now, if you ask me, there hasn't been any negative catalyst towards airlines. So I think airlines is going to be the next piece that I'm going to break down for Sunday. I think they're all in great spots, but for now, this market is still coming down, and I want to be able to catch the reversals on these, right? So maybe this bottom down here. I know people are going to call this gap down here, but I guess we'll get there when we get there. So I don't see nothing negative for airlines as of yet, but we'll see. Same thing for financials. Financials are coming down to this pre-COVID level again. And it's just retesting again, and a lot of the tickers are in great levels. So if you look at JPM is at an amazing spot. BAC is at an amazing spot. MS looks like it might just keep on dropping down some more. So the financial sector, I think in general, looks pretty decent, along with the airline sector, the jets. But when we get there, we'll get there, right? As for oil, we did hit that supply, guys. Nice little doji on the weekly. The next candle follows is the red one. So if this closed down a little further, like I think I will be the happiest person in the world, because gas prices right now hit the highs of $6.80 for me for premium right here in California. $6.80 a gallon for premium. That's insane. All right. People are saying that this is going to go to 200 and stuff like that, but I don't care what people say. What matters is the fact that we hit a supply here. Okay. I talked about this in the one of the previous videos here that we're heading into the supply, we could potentially hit that 130, but either way, this was your supply zone based on the weekly. And I showed like a, I think it was like a 20-year or max date. So I don't know if this is the start of a downtrend for oil. I mean, I hope it is, but we'll just have to see. So we'll check it again on Sunday and check out some good levels for oil. As for energy, this thing is coming down as well. I had a nice gap down this week and then just started trending down. So XLE, expect this one for sure. I think it's kind of done. The XLE FANG is coming down as well. I think there's a good opportunity to short energy sector. And I don't think there's a lot of value for this up in these levels at all. So the same thing, this thing created a nice little doji last week and then gapped down and just rejected all the way. I actually thought about grabbing it, but I never did. Unfortunately, I would have been super green, but that's just the way it happens, right? Sometimes we can sit here and predict things, and next thing you know, we're forgetting about our trades, and next thing you know, we missed a full trade. But yeah, so either way, market update, guys. There's a lot going on, and just be aware, we're still not out of it here. We're still facing a lot of danger in the market, inflation and recession levels. We won't know what the GDP looks like yet, but take it day by day. Whatever you guys do, please understand the difference between the demand zone, the supply zone, and the in-between zone, and then the public participation phase, okay? The public participation phase, remember, it's not that strong based on demand. The demand levels you're looking for are the bigger pieces. So this is the bigger piece that I'm looking for on ES. And if NQ breaks, I don't know. It's just going to be a little more intense on this one. Watch tech. There could be an aggressive sell-off coming again. Whatever it is, day by day, guys. Okay. Bonds, yes, 10-year. The 10-year is still trending up, guys. So keep watch on the 10-year. If this thing is just ripping green, most likely the market is red. Yes, that's what it was. Yeah. We are at supply levels here though, but can't say that this is not going up any further. But yeah, hopefully that gives you a better understanding on the market and basically what the zone is. And yeah, lots of stocks coming down, guys. Like I said, if you guys are starting to buy stuff, if you have $100, start with $5, please. Don't hold accounts simply just yet, and expect some more red. That's what I'm saying. Tesla, nice little downtrend today. Amazon. If you guys don't know, please, whatever you do, don't come back here and check levels on Amazon, because these levels were different. So the stock, technically, when it has a stock split, it changes value. Okay. So everything about the Amazon movement is so different. So your start of a new trend began here. Okay, so this is a new chart. So look at it as a new chart, and it's a new company, and let this build structure. Okay, don't go look in the past and say that that's support. Please don't call it demand. Whatever you do, don't call it. Let it develop, let it build structure. Give it about a month or two, and then start trading it. I gave you guys a warning in the past saying that if Amazon, it's either going to rip up or rip down, whichever one, and it ended up ripping down all the way. So please do not chart Amazon and go look in the past. Right now, it's building a new structure. Please understand that when a stock split happens, the stocks move differently. So the contracts are different, the movements are different, the intraday patterns are different, the reaction to the market is different. Everything about it is different, and the structures as well. So again, start new, let it develop, leave it alone, guys, and don't call anything support just yet. Okay. It's a brand new company. These numbers are barely developing. So yeah, we'll leave you guys with that, and I'll see you guys on the next video. All right. So zones, market updates, be careful with inflation, be careful with these bottoms, and quad witching tomorrow. All right, guys, stay green.